Let's also bring on board Mohit Gang, co-founder and CEO at Moneyfront. Hi Mohit, good morning. Thank you for coming on First Take. I want to begin by asking, I mean, the kind of rally that we have seen in the in the last two sessions, first after the exit polls and now after the big results that came out, we opened gap up. And I mean, is there much left for the markets to react, or is it like all the exuberance has that been already priced in?
Hi, Suyash. Always a pleasure to be on your show. Look, so I think in this morning we released out a note saying that Christmas has come early, knocking our doors, and I think there is that brilliant nip in the air, and it was very much evident when the results came out, and much to the surprise of markets and people's expectation. I think, look, there was a bit of doubt around how close the results could be or how closely the elections could have gotten in couple of states, especially Rajasthan and Madhya Pradesh and Chhattisgarh. I think it was looking like there was no perhaps Congress would have been a clear winner, but 3-1 margin I think market wasn't expecting, and the extent of the victory is what is surprising the markets and what is leading us to a big gap up opening. Look, collectively, these states kind of represent almost 60-65 seats in the Lok Sabha. I'm not sure on the exact number though, but that's a good number. Right, and I think market is anticipating that the challenge for 2024 is that much more less uh, going forward, and a continuity factor is something which markets just love, Suresh. I think continuity of policies, continuity of reforms, continuity of the infra push which is happening, continuity of the government capex, I think that is what market is loving. Whether this gap up will sustain through the day, I'm not really sure. There could be some profit booking at higher levels. Honestly, I think people will take off something from the table, but on a secular basis, I think now we are looking extremely good and extremely well poised for next 6 months leading up to general elections. I think this is one of those golden times when you cannot sit out and watch and wait for any corrections. You have to be in the markets with whatever your equity allocation is. You have to be just invested.
So over the next 5-6 months to the general elections, to the road to that, can we expect the market to get in a pre-election rally and perhaps go to 22,000 maybe?
Look, I think again, referring to our note today, we are in a Goldilocks kind of a scenario, right? The GDP growth is topping up 7.6% or 7% up. The inflation is well contained, which is almost hovering at around 5% mark. The interest rates are nearing peak levels, and we will see a rate cut cycle following next year or next financial year, perhaps, right? The domestic flows are extremely robust with a $2 billion kind of an SIP flow. The FIIs are turning back to the markets, and to top it up, the US 10-year yield has corrected almost 80 bips in last 6 months. From a peak of 5%, we are down to almost 4.2% out there, right? So I think the overall sentiment and the mood, the manufacturing push in the country, the capex growth, the consumption cycle, everything is looking extremely promising. It's too good to be true, honestly, at times. And you can argue. If you want to argue from the other side, you can always quote out the high valuations, which
Right.
I completely confess and agree that the valuations on the higher side, and obviously there is a looming geopolitical risk always, but I think market has taken all that in stride. We've gone through those cycles, and perhaps this is the time when markets are extremely well poised for a fantastic rally.
That's actually what I wanted to get to you, Mohit, on was that are there any threats for the next 5-6 months that investors should perhaps watch out for?
Uh, Look, honestly, I think I'll repeat what I said, which is the risk is higher if you stay out of this market. The risk of not being participating in this rally can be detrimental to your long-term portfolios and long-term journey of wealth creation. And I'm being very honest here. The risk of correction, if there is any, around the corner is still small. Those 3, 4, 5% corrections might not and should not actually deter any investor from being into this market. To highlight some factors, yes, I said the geopolitical risk still looms very large. The global escalations going on can potentially lead to serious blockages in some in global transport and logistics systems and the oil markets. Oil, though, has cooled down, but oil always remains a risk for India. And a if and but case of a US recession. Look, not everyone is on board with how hard the landing will be in US. Will it be a soft landing? Will there be a recession? How severe that will be?
Right.
We will have to see it as it comes, right? But I think there is a probability. We cannot deny that the US landing might be a little harder than what people anticipate. But again, those are all factors markets have discounted and markets have taken into their stride. The yields have been softening in US and the US economy has been doing extremely well. But investors in India also need to be cognizant of these factors, which is oil, US economy going into a recession or a hard landing kind of a scenario, and perhaps the geopolitical tensions. To my mind, these are three big things to watch out for.
Uh, Sriyash, I was looking at, good morning, Mohit. I was looking at the speech of Prime Minister Modi yesterday post the victory. Now, he mentioned certain sectors that, according to him, have revived during the last 10 years. And he mentioned steel, he mentioned cement, he mentioned aviation, and he mentioned there's been a surge in the banking owing to more people going in for home loans. What do you make of these sectors? I was looking today at some of the PSUs and all of them are up, whether it is Steel Authority of India SAIL, that's up 1.61%. BHEL is up over 2%. NALCO is up over 2.3%. So what do you make of this? Are these the sectors which were dormant sectors for quite some time that people should begin looking at them again? Steel specifically?
Yeah. Okay. So look, before I answer that part, I'll just add one more point to what I was mentioning before. I think what the markets are loving about this mandate is also not just the continuity of policy and reforms and the infra growth and the capex cycle from the government which is going on, but also that there will be less fiscal profligacy, right? And
Yes.
I think the ruling party has done extremely well to hold on to the temptations of giving a lot of freebies or announcing a lot of freebies and also returning back to the OPS. I think if the results have been to the other side in all these three states, a move towards OPS would have been extremely detrimental to the fiscal health of this country. And I think that is also one big positive which is coming out of this entire mandate. Now, to coming back to your question, all this is leading and fueling to an extremely bullish sentiment on the public sector space. The PSU banks have long been duds in the economy, but I think over last 2-3 years, whatever has happened in terms of their NPS coming down and the books being cleaned and the growth rates now matching almost the private sector space, they are even today, after this massive rally, are quoting extremely cheap compared to their private sector peers, right? And there is no reason why a PSU bank today in this country should be quoting at a 1.5 times book when a private sector bank with a similar kind of growth rates and a similar kind of asset quality is quoting at almost 4 times book, right? And that's being the argument in the market. So I'm not saying that they have to match up to a 4 times book, but yes, there is a headroom available out there from a 1 times book to a 2 times book kind of a thing. So this entire PSU space is looking extremely promising. The kind of steps which government has taken is fueling this entire growth, right? So I think the PSU banking space, names like REC and PFC and now IRDA, they have all been flying in the market though. But
Right.
those are spaces and pockets which have done exceedingly well, and I think will continue to surprise the market on the upside. Other sector which is looking promising is obviously bank, because any growth which fuels the economy will have to pass through the banking channel. And I think again the private sector banks have long been lagging. Now for almost good 2 years, the bigger names in the private sector space has not done well, and my sense is those are the names which will now start picking up. We have seen a decent move in ICICI Bank today morning, and I continue to believe that that private sector banking space will should lead the pack from here on.
Okay, so a good time to look at the PSUs again. Mohit, I'll just break here. We have the excerpt from Mr. Modi's bite yesterday where he mentioned the industries that have revived under his scheme. If we could play that bite right now.
भारत के शेयर मार्केट पर भरोसा चरम पर है। आज भारत के निर्यात के नए रिकॉर्ड बन रहे हैं, यूपीआई ट्रांजैक्शन के नए रिकॉर्ड बन रहे हैं, त्योहारों में खरीद के नए रिकॉर्ड बन रहे हैं, गाड़ियों की सेल के नए रिकॉर्ड बन रहे हैं। आज भारत में सीमेंट प्रोडक्शन बढ़ रहा है, कोयला प्रोडक्शन बढ़ा है। आज भारत में स्टील उत्पादन बढ़ा है, बिजली उत्पादन बढ़ा है। दुनिया भर की कंपनियां भारत में मैन्युफैक्चरिंग के लिए आतुर है। हवाई यात्रा करने वालों की संख्या उच्चतम स्तर पर है। होम लोन में भी, उस सेक्टर में भी बहुत अधिक वृद्धि देखी जा रही है। साथियों, आज भारत का फिजिकल इंफ्रास्ट्रक्चर पूरी तरह से ट्रांसफॉर्म हो रहा है।
Now, Mohit, bringing back the conversation to banking pack and the private banking space, you mentioned ICICI, but we are seeing strong movement across the banking space. You know, banks such as HDFC are finally reacting, and as we know, the entire banking pack constitutes about 38 to 40% of the Nifty basket. So, is that the sector that will perhaps, you know, provide us that further push to all-time high levels? Also, considering the fact that FIIs are now finally returning back to the markets.
Yeah, totally. Look, so Suresh and Amit, I think the speech excerpt which you played was absolutely relevant, and honestly, I think no one can cover all the spaces in one breath the way Honorable Prime Minister did out there. Honestly, I think he named everything out there, which is exceedingly doing well. Which is right from your domestic manufacturing to your export driven sectors, your aviation, which is booming, consumption, which is booming, the production of steel, cement, and electricity, all three sectors buzzing. So I think this infra theme, the capex theme, the PSU theme, yes, these are all finally living up to expectations, and these have also, mind you, come out of a long cycle of underperformance, right? So market is perhaps catching up onto these things, and we have not yet seen the private capex picking up in this country. My whole sense is after this mandate, and perhaps just after the general elections, if the government were to return to power, and now that the chances have increased, we will see a whole splurge in private capex, which has been lagging in this country. It's only been public capex thus far. It's only government spending which is boosting the economy. I think once the private sector kicks in, this will be a heady concoction. To answer your question, Shuesh, yes, I think banking is one terrific space. HDFC again for last 2.5 years, or maybe even longer, has been drifting away. I think all those factors which were revolving around the big merger are now well taken care of. People are aware of the balance sheet, the combined entity per se, and my sense is now that the big banks of the country, which is HDFC, ICICI, Axis, and to some extent Kotak, maybe, I think it's high time this pack picks up.
Yeah. Keeping on banking, you mentioned HDFC and Mohit, taking on from what you said about PSUs, I was looking at SBI, and that is, while HDFC is up 1.8, SBI today is almost up 3%. What do you make of that, Mohit?
And again, another stock which has not reacted or participated in that rally that we saw in PSU banking space. It was, I think, only SBI and Bank of Baroda that did not move much, whereas we saw a big rally in the PSU banks.
Look, honestly, I think markets have not been extremely enthused about the results of SBI and Bank of Baroda, per se on Bank of Baroda. I think markets were anticipating much higher in terms of growth and everything. Look, I think it's the overall PSU rally which is fueling up, and which is perhaps leading that along with the wave. I think all boats are rising out there. I would still put my first preference on the private sector banking space, and then perhaps on the second tier of PSU banks, which to my mind are more undervalued today, and perhaps are showing more robust growth or on that front, right? So SBI and Bank of Baroda, I will still wait out for a quarter more to see the result quality and the improvements thereon. My sense is. But as I said, a rising tide will lift all boats. So perhaps yes, the overall pack will also do good.
Mohit, specifically with respect to Bank of Baroda, do you think the caution in the market was largely due to their internal issues rather than actual numbers of Bank of Baroda, which was still good?
I think, look, markets don't take kindly to any kind of RBI action on these banks. Honestly, I think when RBI came out and said that they can't be using their mobile app to acquire new clients, I don't think so that got taken. Market took it quite nicely, because finally these banks are trying to go digital, the way all the private sector banks have done. And if any kind of what do you say, spanner comes out in that, markets don't typically like that. So look, I think there is no doubt that these banks are doing exceedingly well. The quality of overall asset quality is improving, and their NIMs have been consistent and decent. But I think overall, when any kind of an RBI action comes in, markets don't take that kindly. My sense is, as I told you, one more quarter of result, if they show good performance out there, I think markets will again start watching out to these stocks positively.
All right. And before we let you go, Mohit, the large caps are finally participating in the rally. Mid caps in the small cap space has been rallying for quite some time. I think in November alone, we saw a rally of about 10-12%. Mid cap index is on a 20-21 day winning run. So is the small cap index. Time to perhaps shift focus to the large caps?
Oh, absolutely. I told that in your show last time also, Suyash, and I think I am today on a relative basis more bullish on the large cap names. Right, in the mid and small cap, though, you will still find those big stories and outperformers, but the find is tougher. Incrementally by the day, right? And to find it at a right valuation is a nightmare. But on the large cap front, you have good valuations, you have great brands, great names, all at a very, very relative price today, relatively cheaper price today. So my sense is yes, the trade is more lopsided in favor of large caps. But yeah, for those people who can still find and scout for hidden gems, I'm sure there are enough and more names available down the ladder also.
All right, that's the view coming in from Mohit Gang. Focus on large caps right now and perhaps not too many opportunities in the broader markets.